I think Prakash Diwan is with us with what he's making of things. Prakash, good morning. Great to have you with us here. From a market standpoint, I mean, I was making this point earlier. Unless very disruptive, markets are largely unbothered. But what's your sense if you were to kind of sort of pick a sector or two where this will show up and you could see some price moves? I'm talking about the tariffs.
Good morning, Prashant. You're right. I think we could keep discussing what could happen on the tariffs till the cows come home, but the markets will do their own bit. And remember, you just have a few days before the result season starts to kind of emerge, and the market will kind of get to be enslaved with that. From the tariff potential disruption perspective, I think if nothing happens on auto ancillaries, that's an area that could kind of, there's been a lid on most prices, most price volume action, and that could kind of change. We saw how, some of the local triggers for Bosch and all, Gabriel was kind of playing out last week. And that could kind of, percolate to a wider basket of auto ads. That's one area. The other thing which has not been discussed when we talk about tariffs in the same breath is the pharma pact. There was likelihood that there could be some restrictions on pharma companies which haven't come about. Now, if there's some emergence of that, you'll probably see a little bit of softness there. But by and large, I think the market will continue to march ahead on the anticipation of improvement in numbers. The June quarter updates, while they might be a mixed bag for the banking sector, for example, but some of the gold jewelry companies, some of the FMCG plays, they have started kind of giving some sort of a promise. And if that were to happen, you'll probably see a very strong sector rotation as well, because there are sectors which have still not kind of participated in this up move in the last 2 months. And my sense is the market will probably look for opportunities there.
Okay. Prakash, hi, morning. Good to have you on. IndusInd Bank. So we all know, and actually let's pull up the long-term chart as well on the IndusInd saga. The thing is that the business is getting impacted with all of this, and that's what the stock has done. Let's pull up an even longer chart. Yeah, that's 3 months. Now this is the issue. The stock has continued to rally, and then you get an update which is giving you the harsh reality that all the ongoings of the last couple of months, they're impacting the business, not just advance growth, but look at the CASA ratio. It's fallen 500 basis points in the last 1 year. Your thoughts?
Good morning, Shurbi. So this is quite understandable. We've had a fallout which has been fairly drastic in terms of what impact it has. And the ship has been rudderless of sorts for the last many months. So it's no surprise that some of the metrics will start deteriorating. But what's interesting is that the market is penciling in a hope trade here, that nothing more could go wrong. There's not much of worse news flow that could hit the stock. And whatever happens is going to be incrementally positive, right? So that's the reason why the short-term moves probably look a bit deceptive. But as I told you last time, these things need much more effort, time, resources to repair. We've seen how Yes Bank took so long to really come into the reckoning where a suitor started wanting to look at it. So I think IndusInd will also have to go through that grind. Don't expect fireworks just because some new CEO gets appointed. I mean, you will have to have a CEO, right? But it won't make such a big difference till the organic improvement happens. So not something which I really like, especially when you have much more promising plays in the same space available, in the same size available. So I would give it a pass.
All right. Hi, Prakash. Good morning. Good to see you in. Prakash, what's the view on Godrej Consumer? In the last few weeks, you're suddenly hearing about positive sentiment on consumer stocks because the street is bracing for a far better year in the second half of the year. Now, Godrej Consumer, their quarter one update itself is a little better than what the street was working with. I'm reading a note coming in from Nuvama. They are saying that they're expecting the gradual recovery from here on. The numbers are a beat. What's your view on the stock?
Good morning, Nigel. No, so absolutely. As I was mentioning to Prashant earlier, that some of the early signs from the June end, updates are looking very positive from a demand revival perspective. Okay, Dabur probably has it, worse off because of the early monsoon, because they have a beverage portfolio which is significantly active and large. But that's not the case with the Marico, Britannia, HUL, even Godrej. So what it does is that if the monsoon is early and widespread and is adequate enough for this timeline, it sets a base for a much longer, much stronger festive season or post-harvest season, right? And that's exactly what most FMCG companies badly need. The other thing that's very interesting is that we've not had any raw material disruptions in terms of price hikes, in terms of grammage reductions, all of those related things which we saw 18 months back. So the companies have digested all of that, tightened the belts, they've learned to live with the realities of poor demand or tepid demand. And now I think the margin improvement will be fairly smarter than what we expect. The volume growth will take some time to come, as I said, post monsoon, but the margin improvement will be fairly sharper, and that's exactly what will start getting worked onto the prices. My sense is FMCG is not performed from a sector rotation perspective, especially the larger ones. We'll probably see a lot of money getting allocated to it over the next couple of months.
Prakash, we had Mitesh with a sell call on Angel One earlier, a technical trade, but I mean, that kind of sort of gets me to the capital market pack of names. Novama was down sharply, BSE was down sharply, Angel lost about 5-6% on Friday. What's your view? The Jane Street impact, but it's not just Jane, right? I mean, other similar players perhaps could also not be under scrutiny. We don't know for sure for now, but they could pull back in terms of activity. What is your sense?
No, I as I mentioned on Friday when the news broke out, there will be an impact on this because the activity levels will drastically get subdued, and there will be a shift into other asset classes or other sub-asset classes, if you will, which means that some of the brokerages will get directly impacted. But the entire complex of capital market plays has much more to offer than just brokerages, and those are the ones that are getting exchanges. Brokerages might get impacted because of volume shrinkage, but if you look at the mutual fund side, it continues to be very steady. It gets much more efficient. You have funds now launching international funds as well out of the GIFT City. So, that's the space you could probably latch on to. So whether it's a CAMS or K-Fintech, it's your choice in terms of what you like. They have different portfolios and there is differentiation. So depending on what an investor likes, you could choose out of that. But my sense is AMCs and all of these activities will continue to offer very good opportunities which are long-term, secular, and fairly undisturbed. So it's just one pocket of the market that's likely to get impacted, but the other opportunities continue to be strong.
Okay. All right, Prakash, we'll leave it on that note. Thank you very much for joining in. Good to get all those thoughts in today.